Good. You all makan dinner already? So basically tonight, what we're going to do is I just do a quick one for tomorrow your test. I think time is running short. I hope that's why that day I quickly put up some answer to yours, so hopefully you all can do yourself and practice. Because tomorrow 11 our test is at 11 to 1. Remember that. So today I just quickly want to narrow down to you so that you all can prepare for your test basically. Okay, so I go to again. I telling because some still WhatsApp me, what is the scope now, what tutorial to study lah. I think at this moment, if you're still asking me this question a bit late already, you still do not know which tutorial to study and so on. So quickly narrow it down to you. So can see my screen, everybody can see my screen. Okay, so some points for you all to take note. Okay, first thing is tomorrow test, everybody. DKZ. Okay, 11 to 1. Even though I put 2 hours here, it doesn't mean that you were given be 2 hours. I tell you, you got 15 minutes reading time. And the rest, 1 hour and 50 minutes. That means 75 minutes is for your answering partner. Okay, so basically it's about 90 minutes, 1.5 hours in total. So please come on time so that you don't waste time on the earlier part. Okay, 2 questions. Actually, I want to give you the guidelines only, and I hope that you all can ask me question. I hope you all can ask me question rather than I still doing the tutorial with you. I don't think I still need to go through tutorial with you, but rather answer your question already. So 2 questions. So your question 1 is your capital budgeting techniques. That goes to your tutorial 5. Actually, tutorial 5 is complete the capital budgeting technique, especially those past year question. So that's why I quickly give you some scheme answer for the past year question. So two question is on scenario. So basically, you are given a project scenario. And then what you need to do in this project scenario is about 2 parts. First part, you're asked to develop the project cash flow. Net, not just the cash flow. At the end, you need to get the net project cash flow. So please use this format. Please use this format because it's easier for you to do from later on when you want to use it for the second part, that is your budgeting techniques, because part 2 will be your budgeting techniques already. Part 1, you must get this out first, budgeting techniques. Part 1, you must get your project net cash flow. So you need to develop it. Developed it means that you need to do from year 1 until the end of the life, depending on your project life. Please use this format. Okay, so therefore this part is where you do your itemization. That means you list it up that time, put in all the values according to the timing that you need to spend or you earn the project. Please, the first part will be your capital outlay. This is your outlay. Go part by part. Follow this sequence. One more time, I explain to you the sequence. This is the capital outlay where you need to put in. First thing is, what is your investment about? What is this project doing? We call it investment. Second thing, is there a working capital or not? Working capital. Working capital can include inventory. Can include inventory because inventory is a form of working capital. And the third one will only come in if there is a replacement project. A replacement means that a machine that's old already, you need to find a new machine or buy a new machine to replace the old one. So this is called replacement project. If each project is not the replacement project, you only have 1 and 2 only. Clear? Okay, so look for investment followed by looking through, is there a working capital involved in this project or not? If yes, please include in the initial year. So I'm talking about initial year. Here we'll have these two or plus number 3 if it is a replacement project. Okay, once you finish this part already, then the next one that you move on is into this period. Put in the values here. So you must look through the question, read it carefully, and please understand it correctly. Because the values over here that you put in will have positive, negative. Positive means inflow, negative means outflow. Clear? So you finished the capital outlay already. Now I want to move into the second part. This part is about sales. Start with sales, because when you do a project, basically you want to get revenues or you want to get sales from the project. So therefore sales will only come in when you start your project already. Your investment is done properly already, then your sales coming. So start with putting down the sales and then with all the expenses later on. The expenses spent to generate the revenues. The expenses here means that the money spent to generate the revenues. So revenues is always inflow, 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 inflow. Expenses will always outflow, outflow, outflow. Hear it? Your values must always has a positive or negative. A positive means that it's open bracket, it is inflow. An outflow money will always have a sign in it, a bracket, to show that it is a negative outflow. Okay, so therefore you list it out lah. You list it up through the question. What are the sales and what are the expenses in this column? The red column. Until the last one, please don't forget about your depreciation. I start off this part first. Please don't forget your depreciation. Because depreciation, you list it out from the information of your project. And last part of it is you need to calculate the depreciation of this. Depreciation of this one, the investment over here. The investment is calculated as an expenses during your operation year. And these expenses has a special name. We call it depreciation. So always do depreciation as the last item in your expenses list. Okay, yeah? And depreciation, please go and learn straight line. At least straight line or MACRS, how to do the calculation. Hear it clearly, at least straight line and the MACRS method, how to calculate the values of the depreciation so that you can put into the operation year. Okay, so after you finish the depreciation, now This is your operation year where it is all red color. Now we go into the end already. The end of the end year. It means the end of your life of the project. You always see is there a salvage or not. If there is a salvage value, you need to put in here only. Salvage doesn't repeat. Salvage will only happen at the end of the life. So therefore salvage will be here. Clear? Okay, so that is what we call, you put in your cash flow details into this table format. So this is called a cash flow schedule. After you put in already, now you start to do some calculation. Calculate what? Remember the sequence of calculation. All this, please remember it by heart already. It is a development steps to do it. So you have to remember the development steps. First thing is calculate. What you calculate here, I put in another color. What you calculate here is, first thing you calculate, not so dark. I use what other colors? No colors already. I use black lah. Calculate income before tax. Remember this one. How you get income before tax? Income before tax is during your operation year. Never have income in year zero. Don't ever calculate income at year zero, because year zero is your investment, where you're spending money over here. Where you got income? Income when there is a sales that time. Then only you got income. Sales minus the expenses over here. Can you see? So this column here, that's why you have inflow, outflow over here. When you sum up this column over here, you get your income before tax. Income before tax is your sales. Remember, I keep telling you sales minus the least of your expenses over here. So you get here income before tax, income before tax, income before tax until the end year, because the end year is still your operation year. And then what you next to calculate here will be income before tax is required you to pay tax. So therefore you calculate tax. Tax at what percentage? Please look through the question. The question will tell you what is the tax percentage of the company or tax amount for the company. So please calculate it accordingly lah. Calculate this is based on your income before tax. Income before tax, tax multiply the percentage. Percentage of income before tax is your tax. If your tax is 20%, 20% of this amount, 20% of this amount will be your tax. Clear? And tax is paying out. You pay out tax. So tax always is outflow, 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 outflow. Clear? Outflow. And then once you calculate your tax already, now you're able to do another calculation, year by year calculation, but just for the operation year, it's called income after tax. So income after tax is income before tax minus tax, as simple as that. Income before tax minus tax, or outflow here, sum up lah. Sum up, then you get all your income after tax. Okay. Now, the next thing that you will do after your income after tax is you need to do your next thing, that is take back your depreciation. Just now, depreciation is an expenses. I told you one here is expenses. So you consider it as outflow. But when you becoming net cash flow, because we want to do net cash flow. Can you see? What we want to do here is cashed. Is cashed. So if cash, depreciation is already spent in year zero, but now when you consider it back as your project cash flow, you become inflow back. Therefore, we said plus depreciation. Depreciation here was negative. Now we become positive. Add back, add back. So now the same amount from outflow become inflow, inflow, inflow. All the depreciation values over here, pose it back according to the year, but become all inflow. Clear? Okay. Now, after you do this already, before you finish it up at net cash flow, please return back to here and check for one more thing over here. Is there a working capital here? No. If there is a working capital, now you have to now do another consideration over here is called recovery of working capital. So recovery of working capital is like that. If working capital is increased, it is called outflow. Money spent to increase the working capital. So increasing working capital, increasing inventory is outflow. So if this side is outflow, when you do the recovery, that is only end of the life. Remember that, recovery of working capital is at end of the life. That means one is at 0, the other one is at end year. So this part, what you need to do is the opposite side of this one. Opposite side of here. This is inflow, here will become outflow. This is outflow, here will become inflow. Clear? Okay. Then after you list it out already, then you will draw a double line over here already. Why double line? Because now you will do your project net cash flow. What do you do in the project net cash flow? Now you have to do from year 0. Whatever that you put it over here, you have to do a summing up. Summing up means sum up means you inflow outflow, you just sum it out. No? Inflow has a positive calculation, plus calculation, then outflow is a negative calculation. So summing lah. So we say sum up this column, you will get here. How you get this is here only. Don't do above with no more already. Sum up from here will become here. Sum up from here will become here. Sum up, sum up, sum up, sum up. Therefore, you will get a year-by-year cash flow. So your net project cash flow will show a year-by-year from year 0 until the end of the life. That is your part A. Part A will require you to do your developing of your cash flow. So what you get after you do your part A is here. This table will be in your part A, and now you take this and go into your part B. What is part B about? Let's see what is part B about. They are going to show you the part B. Any question? Can you talk to me? You can talk to me because I'm not looking at the question. But I want to call out another blank paper. Oh, I call it insert new page. Okay. Okay. So now I go on to part B of your question number 1. What is part B about? Part B, now you do capital budgeting techniques. This is the part that you use your cash flow and you evaluate the capital budgeting techniques. Okay. Now I tell you what are the techniques that you need to study. Listen carefully because this question requires you to make a decision. Later on is you must state this as your final answer to accept or reject. Okay, accept or reject. So this is a decision kind of capital budgeting or project evaluation. So as I keep mentioning to you, for decision making, we would like to do the discounted techniques. We always like to approach the decision part by using discounted techniques, not the non-discounted. Okay, So under the discounted method, you'll learn quite a lot, but I'm now narrow it down to discounted payback, NPV, IRR. Everybody know how to do this trick? If do not know, please go and learn it now. Again, there is a format that you consistently using this format, then no issue lah. Because just now we already get the cash flow table, right? We already get this table, right? This part, right? You see this part? Now you turn it into, this is a horizontal kind of tabulation. Now you tabulate it using vertical, meaning that your time here become here. Always do it this way, so it's easier for you. This will be your year, and your 0, 1, 2, 3 until n will be here. Okay, so this is your project net cash flow. Can you transfer it into this? I'm sure you're able to do that. Don't continue from there, because now we are going to use a few techniques to do justification. So whatever money they want to put it here, you put it here lah. Now you have your positive, negative, this column lah. Just rearrange this column, rearrange this column. That keep telling you this column now become a vertical format. A vertical format. Your year now become, your year was this, now become like that. Your net cash flow like this, now become like that. Okay, so now you have this already. So once you have this table, now can I ask you how you do your DPV, NPV, and IRR? No, I'm sure you can do it already, right? Discounted method. What is the first thing that you do? Discounted method? Your discounting calculation. That is where you use your PF, that is use your AF tables. The tables is given to you. So please use it so that at certain percentage given in the question again. I told you the exam, I'll give you the question and then you're able to calculate the present value. Discounting is to find all these future value so that you know what is your equivalent present value of this future sum. All this when you develop is the net cash flow tying up with the year. This is called future sum. But when you do a discounting method, you are finding the present value, equivalent present value. Therefore, please learn this. I don't think I want to do it anymore. I've been giving you examples and so on and so forth already. Please know how to do your DPV is A plus B over C, the simple formula. And PV is summing up of your PV column, even easier, summing up of your PV column. The IRR is where you extend your NPV calculation at a higher discount rate. Keep going higher if you have an NPV that is positive until you are able to match a positive to a negative, where you now use what? Use your interpolation method. So now I give you another information here is use interpolation method. Do not need to draw graph. Just use the interpolation method. Clear? So through the interpolation method of one positive NPV, one negative NPV, now you can narrow it down to what is your IRR percentage. IRR is in percentage. NPV is in value. And discounted payback, your answer is in year. Okay? So with this, I don't know what are the three, maybe two, maybe three, maybe two, minimum two lah normally. But we need to use to evaluate your project, whether it's accept, reject, or approve or reject lah, kind of things. So that will be your part B. So with this, now sort of able to do your question 1 already lah. Okay, so question 2 leh. Question 2 even easier. Question 2 even easier. Insert. Okay. Question 2 is what goes into your tutorial 6? So tutorial 5, tutorial 6 is project scenario. And in the class, very clear already, I tell you just do calculation. But I won't tell you which equation that you use, because calculation based on equation, right? So you have the algebra equation, and you have another equation that is called CM equation, contribution margin equation. So please go and memorize the equation. Please, so simple equation, please memorize it for tomorrow test. So as I say, break-even point. Please learn the break-even point. And for your algebra, if required, or CM equation, that's the point. So you have your X values over here, and then you have your BEP in terms of dollar and cents. So based on, so what you need to put into the equation, basically these three things only. You need to know what is your P, what is your P, what is your V, what is your V, and what is your F. P is selling price. See clearly, is selling price per unit. V is variable cost per unit. Fixed is fixed cost per period. If you want to specify, is per year, because most of the calculation of the project we look at it by year, right? But variable cost at the end is you are able to know what is the cost per unit. So whatever cost information given to you, please able to summarize it into what is your selling price per unit, what is your variable cost per unit, what is your fixed cost. Then only your formula is able to use. If you don't have these three, your formula will need these three values in it. So please do so. Yeah. Okay, so if CM, then you please able to know what is your CMU, what is your CMR, because that will be two things in your equation when you use a CM equation. Okay, and the next thing is your MOX. MOX based on X, MOX based on, based on unit, based on this formula. Please remember again. Okay, and how about your MOS in percentage? Again, no need. Okay, and how to calculate profit? How to calculate profit? If it is already above break-even point, basically profit will be equal to sales minus your cost over here. Again, the cost now already sum it into variable cost and fixed cost. Can you see? Now I put variable cost. Did I put variable cost per unit? No, I didn't put a variable cost per unit over here, because the V here that you have to multiply by the quantity already. So we call it variable cost. Sales also is not selling price, but sales go from selling price multiplied by quantity. Variable cost over here is variable cost per unit multiplied by the quantity. Fixed cost is regardless of your quantity. So therefore there is this fixed cost in here. Okay, so that is how you get into your profit. And remember, we have also what we call operating profit. That is what this equation used. You use a profit level that is called operating profit, and there is another profit that we always do. It is called the net profit. So how you convert this into this, then only you are able to apply into this equation. All are shown in our tutorial many times already. Okay. Okay, that is question number 2. So all these are things that I have already developed with you, clearly. I keep telling you during the class. So far, any question that I see here? Oh, very good. All understood clearly, huh? So now, if working capital is mentioned, recovery is you put in one. Take E, take E. Working capital is mentioned, but recovery you must do it one. When there is a working capital initially that you have the working capital, recovery is something that you have to do it when we end the project that time. Is it clear? Take E? Take E? Are you clear? Oh, okay. Okay. So what I want to do now is text me or type me your question. Now I answer your question. Tricky question in what sense? Tricky in what question that you say tricky? No tricky question. All are explained clearly. No tricky sini. Don't worry. I would say not the tutorial, the last part of the tutorial, the past year question. When we look at tutorial, the in beginning part of the tutorial, I always start easy. It's like calculation only. It's not a scenario. So I keep telling you that your test is a scenario. It's not like given like that, you calculate like that. It's not as simple as that. So the initial of tutorial is exercises to get familiar with the calculation only. But the real type of questions are more closer to a scenario one. No, tak ada. No graph. I say no graph, no graph, no graph. Everything also no graph. All calculation, equation. So tomorrow bring your calculator, bring your test pad, bring your stapler. Stapler, don't pinjam stapler. Bring along your stapler, your calculator, your test pad. I think that is good enough already. Oh, document you Google. What do you mean? Oh, this one ah. This one ah. The one ah. I just now explained one ah. Cindy, to answer your question, if your calculation wrong, basically you will be carried forward, but I don't deduct full mark because your values become very ridiculous. It's not a 0.1 and 0.1. If 0.1 difference, I don't care, but it can be plus become minus kind of things. Your values become very very ridiculous. I say funny values. So I tend to deduct marks, but I don't deduct full marks. So you don't expect a very close to full marks kind of answer, Sini, because your values are not meaningful anymore. Because if it is an inflow, it become outflow, or it's an outflow, become an inflow. So you need to be careful. So I keep telling you, be careful. You put in a value in your mind clearly tells you that not just the value you need to put in. Is that an inflow? Is that an outflow? Okay. Okay, keep asking question, or you have some question for me to check. Please do it now. And please don't skip steps now. Please don't skip steps because sometimes when you do step, you skip steps, you straight away give me answer. I also don't know this answer. If right is okay, I can presume that you know. If wrong, I cannot presume which step you're wrong. So I may just give a big wrong only. No formula, take E. I say, please go and remember some simple formula. No formula given. I'm so sorry. I won't give you formula. Yes, Cindy. Please do MSCRS or SIL methods. Which question do you want me to do? Please let me know. Everybody okay? Oh, you pick for me. I don't know what is the first question. You pick for me. I told you those questions that I did in the tutorial are enough because I do quite a fair bit of different scenario. So I pick different scenario. Example, product design development. Can you all do that? Okay. The tutorial one. Example, you have what else inside the replacement of the machine also we did that, right? We investment to save cost also. Saving cost is inflow. You look at that. If it is cost saving, meaning that is the cost saving is a revenues to the company. It's also a saving. It's also revenue. We call it revenue, but it's from the cost saving. Sales also generate revenue. Cost saving also kind of revenues to the company. Quite a fair bit. That's why when I do tutorial, I say I want to go this question. Why I say I want to do this question is to give you all things that you need to know already. 2023. 2023. So in our tutorial file, is it? Is it our tutorial file? Okay, let me see tutorial file. Okay, I post it now. This one just a sample. Okay, I post it now here in the Google Classroom before. Post it here. How to attach? I never attach also. How to attach file is where? How do I attach here? Never attach file. Please, someone help me. I want to attach the one. Hey, how to attach? No one want to help me. No one want to help me. How to attach this file? Me 2024 Show me the question. I didn't put into the tutorial, right? Then you need to show me the question. Send the question. Don't you know? Send me the question. It's not in our tutorial, right? Then into my WhatsApp. Then I open up from there. Okay, I do this. Okay, everybody look here. Am I sharing the screen? Not yet. Yeah, can see. Can see. Can see. Can see my screen. Yeah. Okay. Yeah. So you want to see this question? Okay, H Tendram Bahat. So I just do it. Can I do it? I download it lah. Let's see here. Download it so I can open it up. Okay. So let's work on this. H Tendram Bahat is considering very small. Is considering purchasing a new machine to elevate a bottleneck in its production facility. Currently, the company uses an old machine that can produce 8,000 units of product per week. H could replace it with AB machine, which is product specific and can produce 20,000 per week. Machine AB cost? You don't have this answer, man? You don't have this answer? No. No. Okay. The company expect demands for the Easter per week for the rate. Okay. The company operates 45 weeks per year. Okay. So let's do this now. So what is this project about? Replacement replacement of machine. See, okay, so this is your item. How many? What is this? Old machine can produce, could replace with a new machine with product less and can produce one per week. Then removing the old machine and preparing for year. And the company expect demand for the product to be per week for the next 3 years. In the 4th and 5th year, depending. So 5 years, Yeah, I thought I give this answer to you. No, Go. How about confirm? Let me check. This one lah. Hey. Hello. Hello. Still need me to do? Answer already given to you? Very familiar to me. Still need me to do? Answer already given to you? Yeah, provided. The king provided. Okay, go back to Chao Chun. Chao Chun still need me to do already provided answer. Please read through the answer. Provided table is provided. I must give you the answer. I don't want to do already lah, since already given to you. And you are supposed to study, do it before this class. Huh? So let you all have some time to do it yourself lah. Which part? Which part? Which part is too blur? Go and capture it and make it. Go and capture it and make it clearer. Go and capture it and make it clearer. Yes, Guang Fong, you want to talk something? Go and capture it lah. You please process it lah. Because I use my answer, I also. Samba blur is not for you to see the answer, your figure, for you to see where you put already enough already. I'm not asking you to read the answer. I'm asking you to see so that you understand how to do it already. Yihang, show to me individually. I will answer you. No need to be until the value is also clear. Value is for you to calculate it yourself. Please, I show you the step-by-step process. So, which part you capture it, send to me, explain to you. Yeah, you largely until this level is quite clear. Where you study on the phone ah? Yeah, I enlarge it until where got blur. Clear. This answer got calculation of payback, got MPV, got IRR some more using what? Using interpolation method. Quite clear lah. Quite clear. Cannot complain already. Okay, interpolation. Interpolation is max, sini ya. Interpolation. Okay, one more time, explain. So this question is not supposed, I don't need cut it already. Cut it, so I can do interpolation method. Okay, interpolation is like that. Okay. Interpolation is gradient method. If you do or really understand mathematics, what is interpolation? Interpolation is using a gradient, same gradient method. Yeah. Interpolation, if you follow mathematics, it says that you have x1, y1, 2 points, coordinate of 2 points. So is it a coordinate system? X1, y1, and then you have another point that is x2, y2. These 2 points are known. y2 x1, y1 x2, y2 unknown. Then you are able to find a intermediate point. So this interpolation is for you to find the intermediate point where one of it is already known. So for IRR calculation, basically I asked you to do until what? Until at 1%. Example, this is one of your percentage over here. This percentage, example, it is 10% that time. Need to be so thick. Okay, at 10% that time, you do your MPV calculation, right? So this MPV is positive MPV, yeah? That means open bracket one. And then if you do at example, you have 12%, and now you got a negative MPV already. So what you need to do now is, because IRR is in between here, because IRR is when MPV equal to 0. MPV equal to 0 that time, we call it IRR. So therefore you see, from 10% you got a positive and 12% you got a negative. Sure, your IRR is between these two percentage, because when a positive MPV go to negative MPV, you will cut through a 0 point over here. There is this 0 over here. MPV equal to 0, and you want to find out at this 0 point, what is your IRR values over here. Okay, so you have like this, you treated it as x1, y1. This you treated it as x2, y2. So x1, y1, x2, y2, you know already. Now you're going to find your IRR, that is your x value. This is your x value. This is your y value. So you're going to find at what x over here, where your y now becomes 0. So you have this here, this here, this here, this here. Can you find what is your x when your y is 0? All these points are known. Only one unknown over here. And the formula that you should use is y minus y1 over x minus, why is sticky? Oh my bad. Equal to your y2 minus your y1 over your x2 minus your x1. y1, x1, y2, x2, y1, x1 all known, and y is also known. Substitute y equal to 0 here already. Now you are finding your x. So your x will give you your percentage. It give you a 0 point something, and then you change it into percentage. And that you know in your hypothesis is must be 10 to 12% already. Clear? Sini? This is your interpolation. Like you use your steam table like that. You can use, you know how to use your thermodynamic steam table, right? Thermodynamic steam table sometimes require you to interpolate the value that is in between also. But you learn your mathematics, same gradient method, how you find? Okay, now I ask you, I have to calculate, to teach you from max onwards. Okay. Interpolation actually is like that. If you have a line, this is your line, this is your y, this is your x. You already know 2 points over here. Okay, I terbalik this one. This one is y gradient. Our actual one will be like that. Okay, this is your x. This is your MPV. Your y is equal to your MPV. Okay, so you have a positive MPV with a negative MPV, and you want to find at this x value, your MPV now equal to 0. You have this point, you have this point, and this point is sitting on the same gradient. This point is sitting on the gradient. That's why your y minus your y1, x minus your x1, y minus your y1 minus your y2, x1 minus your x2 must be equal to this minus this, because they are sitting on the same gradient. If you do not know, you please put in this value, and then you find the gradient, and the gradient will be equal to this over this, this over this, or this over this also can, this over this also can. Clear? It's a gradient method because they all three sit on the same line. Therefore, we call it interpolate for the middle point. Any point in between, you can do interpolation and you get the values.小尊啊，不要老师辛苦了，老师辛苦了，你明天要会做，这是最重要的啊。please enlarge your page on reading on the computer a better one a bigger screen, so you can enlarge it and see the answer. Okay, Lama. Okay, Lama. Okay, continue, Lama. Hi, Shreya, ask question. Any more questions on your side? Enough, the question in the tutorial is sufficient for you to take this and take this test for tomorrow. Not to worry about that. So, any request? Else can I stop it? Okay. And I say, okay, stop it. Hey, give me thumbs up. Okay, good. Okay, good. You can post me some question in specific. If you want to ask me, you can still post me question. I see it, I'll answer you. Okay, but all the best to you. Tomorrow I see you. Anyone want to say something?
Bye-bye, teacher. Bye-bye. Thank you, teacher.
Bye-bye. Okay, all the best to you. Bye-bye.
Bye-bye.
Thank you, Miss.
No problem.
Miss.
No problem. Take care also.
Yeah.